Hey guys, this is Ashit from Designhill. Can you guys hear us? If you can just type yes or no in the comment section. Awesome, awesome. Thanks, Christina. Thanks a lot. So, starting with a bit introduction of me. My name is Ashit. I work as a community specialist with Designhill. Designhill is world's leading graphic design website where business and clients meet. Now, as you guys know, we were already doing some webinars with different people. Now, today, as per the Designhill's community request, we have now come up with a new business growth series, and there was no other person better than Mr. Ron Malhotra. And he's just an award-winning wealth planner, global speaker, influence expert, and even like I think I'm not the right person to introduce him, but like himself. So some short, quick updates on the webinar. Ron will explain the slides for like 10 to 12 minutes, and then you guys have this option to ask questions, and he'll answer directly to your questions. If in case he just misses any of the answers or any of the questions, we will have a 15-minute session at the end where he will be separately asking each and everyone's question. I guess I've explained much. Lastly, there was this quote told by Mr. Henry Ford. Anyone who stops learning is old, whether at 20 or 80. So we are just here to learn something new. So let's just continue with Ron. Over to you, Ron.
Thanks for the introduction. I just want to quickly make sure. First, I just want to say hello to all the participants that have jumped in. I can see some names there, so welcome all. If I can just check that everybody can hear me okay. If you can hear me okay, if you can just type in the word yes, please. If you can just type in yes, and then I know that you guys can hear me. Great, thank you, Matthew. Thank you, Christina. Thanks. Okay, great. So okay, fantastic. Thank you. Oh, wow, we've got people from the United States. Wonderful. All right. So what I might do is, I'm guessing that a lot of you may not have heard of me, and that's okay because we know that currently with the way social media works and the way online businesses work, it used to be that everything was split, 80-20, but now what we're starting to see is almost 99-1. So we're starting to see 1% of online entrepreneurs really dominating the online platforms, the social media platforms, because it's just the way the game works. The more reach you get, the more visibility you get, the more money you're making, the more money you can put into social media advertising, and so you start to get more and more exposure, and it becomes very hard to compete with some of the online personalities that we see, like Grant Cardone or Dan Lok or whatever it is. But the thing is, business doesn't have to be all online. Like the number of, like, you can have millions and millions of followers and still be doing worse than somebody that maybe only has a few thousand followers when it comes to business. But it can be very intimidating for a lot of young people. Now what's happening is, entrepreneurship's become like the buzzword. Everybody's talking about entrepreneurship. It's become super sexy, and everyone's like, oh, I want to become an entrepreneur. And there's so much information online, and so much of this information is either superficial, it's incomplete, or it's lacking substance. And so what I wanted to do was, as somebody who is actually in the trenches working and having built businesses from scratch, I wanted to talk from experience. So I of course, I encourage you to ask me any questions as well. Keeping in mind that today's topic is considered one of the least sexy topics when it comes to entrepreneurship, right? So everybody wants to talk about capital raising, or people want to talk about, marketing and sales. But finance as a topic in general is not as sexy. But the issue is that if you don't have a reasonable grasp on finance, how business finance works, then that really restricts your ability to be able to grow and scale your business. If you're just a solo entrepreneur, you can make maybe 6 figures without understanding finance. But if you want to grow a business, you want to leverage, you want to scale, you have to have some basic understanding of finance. Now, what I'd like to just do is, I just want to understand the people that are on here, just because I want to make sure that my presentation is tailored to the audience. Can I just get an understanding of, if you're an entrepreneur, can you just type in ENT? If you're an employee, can you type in EMP? So ENT for entrepreneur, EMP for employee. And if you have ever scaled a business, if you've already, or you've raised finance, so if you've already raised finance, just type in yes if you've already raised finance through either a bank, venture capitalist, or okay, great. So we've got a mix of entrepreneurs and employees. Okay. All right. So nobody has really raised finance at this point. Okay. So what I'm going to do is, guys, I'm going to share just what I know from experience, having raised finance myself through investors, having started businesses from scratch without putting too much money in, and having scaled businesses. What I'm going to do is I'm just going to share what I know. And then what we'll have is, if something doesn't make sense, I encourage you to just jump in and ask me any questions so I can clarify things for you, because I have a number of things. I've got quite a few slides that I'm going to go through. But if something doesn't make sense, just please stop me. There's no stupid questions. Finance and entrepreneurship is very complex. There's a lot of people that try and simplify entrepreneurship, but I want you guys to understand at the outset that entrepreneurship is like the toughest intellectual sport. Okay, and it will test everything you have. I don't care what anyone says. I don't care how easy people make it sound. And a lot of the times people make it sound easy so they can sell you their products and services. Let me assure you, entrepreneurship is the toughest intellectual sport out there. But that's what makes it so exciting, because you can't become successful as an entrepreneur unless you deserve it. And to deserve it, you literally have to go through so many ups and downs. You have to be so resilient. You have to not just bounce back, but bounce forward over and over and over again. You have to be okay with uncertainty. You have to be okay with people doing the wrong thing, lying to you, all those sorts of technology issues, people issues, money issues. And so that's why people who, like when for many years I was an employee, I don't come from a business background. Nobody in my family was a business person. So, and so one of the things I realized was when I got into business, how hard it was. And I found a lot of respect for business people who have made it big, like the guys that are in the, hundreds of millions or billions. Like they definitely deserve our respect, because, you realize how hard it is even just to get to 7 figures, let alone 8 figures or 9 figures like some of these entrepreneurs have. So I kind of started to realize that, out of all the endeavors that I've ever seen, sporting endeavors, entertainment-based endeavors, entrepreneurship is definitely the toughest. And statistics tell us that it's the toughest because of the number of people worldwide that fail at entrepreneurship. And you have to know this at the outset, because, and I'll go into what I consider are the key elements of success in entrepreneurship. But if you know at the outset that you're about to get into the ring to fight a match which is going to be the toughest match of your life, and you are going to get knocked out a few times, when you already know that, then there's no surprises. So I'm not saying this to discourage you. I'm saying this to prepare you, because if you already know that that's what you're getting into, then there is no surprises. You're not going to get disappointed and discouraged and disillusioned when challenges happen, because you're going to get a lot of challenges. So, I'm aiming this conversation more at some of the aspiring entrepreneurs or the new entrepreneurs that might be in the group. So just to give you a bit of an idea, so I have obviously I've got my own 3 businesses that I run at the moment, and I'm in the process of launching my 4th business. And I started off as an employee, and I thought my dream was that if I become a professional, then that's the epitome of success. And so I studied and all of that sort of stuff, even though I wasn't massively academically inclined, but I wanted to learn about money. So I pretty much failed at finishing a lot of my qualifications. I started marketing, I started international trade, I even did fashion designing, but I couldn't finish anything. And I think my parents, I pretty much made the determination that I was never not the academic type. And I'm still not the academic type. But what actually happened was I had seen so many people around me struggle financially, and so many good people that never made money, and so many business people that failed. And I made the decision. I had to figure out how money works. And so the first time when I decided that I was going to specialize in financial planning, which was all about money, I actually ended up finishing my degree. And so I kind of realized that it wasn't that I wasn't academic. It was just that I hadn't found the thing that I was passionate about. And you have to have passion in this game, because if you're not passionate about something, you're going to give up. Like, I gave up so many times until I found the thing that was completely in line with my purpose, my passion, my values, and my strengths. It's only when you find that thing that is aligned with your purpose, passion, values, and strengths, it's only then you keep going, despite all the challenges and setbacks that you have. So I want you guys to really understand that, because I know there are some people out there saying that it's this passion, purpose thing is all bullshit. It isn't, because we are emotional creatures. And no matter how intellectually tough you become, fact is, if you're not emotionally vested in your business, you're not going to go through the entire journey. And so I really strongly believe that you've got to have a passion. And ultimately, business is just an extension of your personal vision. And so I want you guys to understand that for me, like the guy who always used to quit, the only reason I was able to accomplish a lot more was because I finally discovered what I was really passionate about. And then the hard work was not an issue then. And I'm lazy in many, many areas, but when it comes to money and business, I'm extremely diligent. I'm extremely disciplined. And research already shows that anytime you embark on any type of endeavor or activity that is in line with your highest values, you will always be more disciplined and organized in those areas. So this is something you guys really need to understand. So some of you, if you're having issues with discipline and organization, it may be because the model that you have chosen is not in line with your purpose, your passion, your values, and your strengths. So that's the first thing you've got to ask yourself. So don't think that because a lot of the times people feel guilty and they say, I'm not passionate, or I'm not disciplined, or I'm not organized. That just simply means you haven't found that thing yet. Okay, because I'm not organized and disciplined in many areas, but these areas I'm very, very organized in business. And so I just want to quickly, if that was helpful, if that insight was helpful, if you can just type in yes, so I know that I'm not wasting your time and I'm giving you something that is valuable to you. If you can just type in yes, if that insight was valuable. Yeah, great. And you'll see that a lot of the times a lot of the times I'll share context that goes a little bit beyond the tactical stuff, because one of the things I can tell you now is that the tactical stuff is, a lot of people are addicted to the tactical stuff. Give me just the steps. Give me just the checklist. It doesn't work. In business, one of your key skills is thinking. You've got to understand the macro before you work in the micro. You've got to understand the bigger picture before you become focused on the smaller picture. And so you have to have this ability to think big. You've got to have the context before you go into the content. And that's why I explained some of these things, which on the surface may not seem relevant, but they are. And at some point they may make sense to you. So just to give you a bit of an idea, after with my business journey, I've done a number of things which I'm proud of. But the only reason I'm sharing this is because just to say that, look, I understand the business game. It's not just from theory. It's not just from reading books or watching YouTube videos. I'm actually in the trenches doing this sort of stuff. So if you haven't already connected with me, and if you want to just connect with me now, you may want to either look me up on LinkedIn. Just recently started to put some stuff on YouTube or Facebook. Or in Instagram. So I'm starting to become more active on Instagram, but LinkedIn and Instagram are my preferred platforms. So if you'd like to stay in contact, please do so. My details are on this screen now. Okay, just want to quickly also tell you that I have 3 rules in business, which I have never seen any entrepreneur breach these rules and become successful. And one of the things that you'll find today is that whilst I'll give you context, I'm also extremely direct. And the reason I do that is because I know in the game of business, if people get offended by how direct I am, they're not going to make it in business anyway. Because one of the things I realized in business is if you're overly sensitive, you're not going to last. Because you know how they say that it's literally a jungle, and there's very few rules. And so what happens is those people who are too sensitive or want too much structure, they usually fail in business. So a lot of the employee mindset people fail because they look for a lot of structure. They want like the tactics, and they want, like even if I'm doing a presentation and I'll give them a lot of tactical tools, but the ones that are really focused on the tactical tools, they fail anyway because they're basically wanting somebody to tell them what to do. They can't think for themselves. So just keep that in mind. And don't be sensitive. Like if I say something, I'm going to be direct because I have learned that in business, you can't be sensitive. So my 3 rules that I believe, and look, you can take it or leave it, but it's really up to you. Number 1, you can't be passive. Business is an active endeavor. It requires your full concentration, your full focus, full attention. You take your attention off the business for a little while, and it starts to slide very, very quickly. The second thing is you can't be casual. I've never seen anyone in business that can just be casual and make a lot of money. Okay. A lot of people who will tell you that you can just sit back and you can have passive income and you can create systems. You see how hard they work themselves. The difference is that sometimes as an employee, you're striving to just survive. But in business, you're still striving, but you're striving to thrive. That's the difference, right? So you're creating something which you're creating impact, you're making a difference, you're leveraging your income, you're leveraging your asset base, you're increasing your net worth. So you're still striving. Like there's no, like I can't see myself just pulling back, even though I've built my businesses to a great extent. It still requires my full attention. So even if I'm not directly working in the business, it doesn't mean it doesn't require my attention. And the third is, as I said, don't be sensitive. A lot of bad things happen in business. People take advantage of you. They lie to you. They waste your time. And you can't be too sensitive about that. You just need to understand that it's part of being in business. Now, look, depending on what statistics you look at, you'll find that anywhere between, they say between 80 to 95% of small businesses fail in the first 5 years. And then out of the ones that survive, 50% of them fail in the next 10 years. Now, I know these sound really discouraging, but you got to ask yourself why this happens. And why this happens is because most people just don't have the mindset that is needed to succeed in business. And business is a lot about mindset. Resilience, the ability to be able to navigate complexity, to be able to think outside the square, the ability to take risk, all of that sort of stuff will come into play. And so mindset, management, and competence is one of the primary factors why businesses fail. So you've got to build yourself up. There's always going to be an invisible lid on the growth of your business based on how you think. Okay, you can put the systems in place, you can put people in place, you can have the best product or service, but your own thinking is going to put a lid on the growth of your business. Your business cannot grow past your own thinking because you're the one that's driving. You're the one that's driving this business. So first, you've got to develop your mindset, because an analogy that I'm going to use is let's just say I have a jug of water, and let's just say that water represents financial opportunities and business opportunities. And then I have a little glass. Once I start pouring water from that jug into the glass, once it gets to the top, it's going to overflow. Okay, not because there isn't enough water in the jug. It's because the glass's capacity is very, very limited. So the first thing you got to do in business is you have to grow your glass. Now, nobody tells you this stuff, right? Or they kind of tell this to you superficially, but I'm emphasizing to you that unless you expand your thinking, and one of the things in business, one of the primary traits that I know is you've got to take 100% responsibility for everything that happens. If your employee steals, if your product doesn't do well, if you can't get everything, you are 100% responsible for everything. So that's one of the things that I say is anytime you find yourself blaming somebody or holding somebody else responsible, you're starting to now become weak as an entrepreneur. So even if you're not at fault, you have to take 100% responsibility. Now, I'm not saying you blame yourself. Blaming is negative, but taking 100% responsibility is positive. So you've got to do that. The other thing with finance is that the statistics now tell us that out of every 100 people that pitch to angel investors, venture capitalists, or private equity investors, only 2, which is basically 2% of people actually get any funding. Okay, and I'm going to go through what I know about, because I've been on both sides of the fence. So I have people. Actually, had this morning, I had a proposal on LinkedIn. Somebody sent me their pitch deck, I've been on both sides. At the moment, I'm funding a deal overseas at the moment, but I've been on both sides. So I've actually acquired funding, and I've also provided funding. So I've been on both sides, and I'll tell you what I have learned from my experiences. So here is what I believe you need to have in place at a foundational element. Number 1, you've got to understand the psychology of business. Entrepreneurs have to be extremely resilient. The number 1 trait that you need to have as an entrepreneur is you've got to be okay with uncertainty. You've got to embrace uncertainty because there is no certainty in business, and it's just a lifestyle, right? So being an employee is a bit like being on a merry-go-round. Being an entrepreneur is a bit like going on a roller coaster. And the roller coasters don't stop, because if you're a true entrepreneur, you'll never stop. If you start to make a lot of money, you still don't stop, because you go, you know what, I want to build the next thing. So entrepreneurs are not really just driven by money. They're built by the desire to create something. And you get two types of entrepreneurs: the ones that build to sell, and the ones that just love the whole they love the whole practice of actually building something. So there are some guys that just want to get to the top of the mountain. They don't care how they get to the top of the mountain. And there are some that love climbing the mountain because it builds character. And I can tell you, nothing's going to build your character more than entrepreneurship. It will really test you. So the first thing is psychology. Once you got the psychology right, you've got to know what you want. Like, I can't even tell you how many business people don't actually know what they want. They're opportunistic. They just go, well, this fad is happening here. This trend is happening here. I'm going to jump on Shopify. I'm going to jump on Amazon. But they don't actually have any goals. And the problem in not having goals is that from a psychological perspective, your reticular activation system is completely switched off. And you are not going to have the motivation and the inspiration to sustain yourself through. So you've got to have some goals. And the difference between goals and objectives is that goals are kind of high level, and objectives have a dollar value and a time value attached to it. So you've got to take your goals and you've got to extract some specific objectives out of it. The third is you've got to plan. People don't like planning in business. I've seen it time and time and time again. People don't like to plan. They don't actually want to sit down and think. They just want to do in many cases. Now, you need to both think and do. You think too much, you're going to go into procrastination. You do too much, you're basically going to get disastrous outcomes. And so the art of blending planning and doing is where the magic happens. Then there's the strategy aspect. The strategy aspect is basically you've got to sit back and you've got to go, what is my broad strategy? What is my long-term perspective? What do I really want? And only then you go into the tactics. Now, what I have experienced is a lot of inexperienced entrepreneurs will start with tactics. Teach me how to do Facebook ads. Teach me how to get money from investors. Like, they've completely missed everything else. And everyone thinks that they can just bypass it, right? Everyone thinks that they can bypass the steps and go straight to the top. And I used to be one of those guys as well. I used to just think that there's stuff that I know, or my product, or what my idea is better than others. And so if you just tell me quickly what to do here, then I'll work everything out. It never worked. I failed, and I had too many setbacks because I didn't have the foundations. So it's a bit like, asking somebody, let's just say you're building a house, and you go and say to somebody, oh, well, which bathroom tiles should I get? And they go, but have you bought land first? Have you got an architect to look at your plan? Have you set the foundations first? Why are you talking about bathroom tiles at this stage? And this is exactly how people think in business. I can tell you, and that's why they're confused. And that's why the business failure rates reflect that level of thinking, because that's not thinking at all. That quality of thinking is very, very poor. Okay. So that's,
let's just tell our audience, guys, if you have any questions regarding anything when Ron is speaking on this topic, you can just put it in the chat section, or also on this questions tab that you can see. All right. Okay.
Yeah. And so I guess you got to understand the landscape that you're playing in, because, if I don't tell you this stuff and I don't give you the context, it's a bit like playing baseball or playing cricket and knowing how to bat, but not understanding the rules of the game. And it doesn't matter how good a batsman you are or how good you are at hitting the ball. If you don't understand the rules, you'll still fail. And so that's why you got to understand the landscape in which you're operating, which is why I always give context before I give content. So I hope that's of value, guys. If you can just type in, I know that somebody there felt that if you feel like that's valuable, if you can just type in yes, so I know I'm on the right track. But if there's anything, if you want me to bypass this stuff and answer a specific question, I'm happy to do that as well. Yeah. Okay. Fantastic. All right. Okay. So now with businesses, again, there are stages, right? And one of the things that I have understood about business is that at every stage, you have a different set of challenge, right? You have different sets of challenges for each stage. So a lot of the times people will start to talk about stuff like they're at the seed stage and they're already talking about stuff that's more applicable in the growth stage. And that's another way to completely overwhelm and confuse yourself. So even though all businesses are unique, there are some fundamental principles that apply to all businesses. And when you understand that, you go, okay, you know what? At seed stage, you have to do certain things. At startup stage, you have to do certain things. At growth stage, you have to do certain things. Then you consolidate, and the ultimate is freedom. Freedom basically means that you're just working on the business. You've actually gone from being a business owner to almost becoming an investor in your own business, right? So that's the ultimate, because that means that you're not working in the business, you're still working on the business, but you're just basically looking after the strategic direction of the business. Of course, at the seed stage, you're still coming up, you're still conceptualizing what your business is going to be, what your idea is, you're trying to put it together. At the startup stage, you're starting to take off, but you maybe haven't broken even yet. At growth stage, you're starting to obviously make a bit of money, so on and so forth. So these are the stages you have to go through. And the key thing you have to learn is, today, one of the biggest problems that we have is an addiction to distraction. So everywhere I see some really talented entrepreneurs, and they're doing like 100 different things. Now, one of the things that you'll need to discipline yourself to do is to only learn what you need to learn for the stage that you're at. Okay. And literally, you have to put the blinkers on and implement what you have to do for that particular stage. Okay. So a lot of the times what happens is people kind of start to, they disperse their energy and attention in 100 different directions. And so because of that, they can't implement anything. They overwhelm themselves, they confuse themselves, and then they got 100 things on their plate and nothing's being done properly. So one of the key aspects is that you need to understand. So for example, when you're at the seed stage, let me give you an example. You have to work out a business plan at this point. You need to work out your unique value proposition. Like, so many businesses even get to like startup or growth and they don't even have the unique value proposition sorted. Like, what makes you unique? And I'll go into this a little bit more in a little bit more detail. But this stuff you need to know, because when you're speaking to any kind of investor, they may not directly question you on this, but they're always, in their minds, they're thinking, does this person even understand business? Right? And the biggest risk to them, and I'll tell you why investors are very risk averse, and I'm going to teach you how to not think like an entrepreneur when you're pitching to an investor. You have to think like an investor, not like an entrepreneur. What they're thinking is, like, if somebody's pitching to me, like for example, this proposal, the pitch deck that I got this morning on LinkedIn, the first thing I looked at it and I've gone, this person doesn't understand business. Even though their brochure was beautifully crafted and they had all of this information, about the team and the numbers that they needed. And I'm just thinking, this person doesn't really understand business. They've just gone and tactically done what they think they need to do. But I could very quickly, I could see past all the design work to actually see how this person thinks. And you have to understand, the more sophisticated the investor, the quicker they'll be able to pick up on what you know about business. And if you haven't gone through you haven't done the thinking work, you'll very, very quickly expose yourself, and you're going to become that 98% of people that can't get that funding. Okay, so I just want you guys to understand that. Now, I need you to also understand that today there is more opportunities. There's no shortage of capital out there, and there is certainly no shortage of ideas. Every man and his dog has an idea today. And what has happened is, because of that, there is a bit of an overwhelm in the market, because there's almost like this fatigue building, because everyone's got this idea now. Every person thinks that they've got this unique idea that's just going to change the world. And so what's happened is, because of the supply of ideas in the marketplace and the economy, there is almost this skepticism that has built around ideas, and the value of ideas has actually dropped. Okay, nobody that I know in the investment world cares about your idea. They really, really don't. And I'll tell you why in a minute. I'll go into a little bit more detail. So there is a lot of capital out there. There's a lot of ideas out there, but there's not enough deals happening out there. Okay, so there's a big difference. And that's because there's a massive disconnect between what investors want and what entrepreneurs want. And one of the first things you have to understand in business is that business is all about psychology. And if you can't put yourself in the shoes of the people that you want something from, you will never be able to connect with them. Okay, so psychology cannot be underemphasized in business. So you've got to think like them, not like you. And that is the fundamental mistake that most entrepreneurs will make, is that thinking they're in their head. They're in their head so much that they're not connecting with the market. They're not connecting with their customer. They're not connecting with the investor. Okay, because they're so inwardly focused. And pretty much business rewards those people who are outwardly focused, because you're looking to create value out there, not in here. So when you're inwardly focused and you're thinking about what's in it for me, what's in it for me, what's in it for me all the time, you're not going to succeed because you've gone into a scarcity mindset. You're basically narrowed your thinking to only worry about what's going to benefit you as opposed to what's going to benefit the investor and what's going to benefit the marketplace. And that's the first mental shift that needs to happen. Now, one of the other things I need you to understand is that money is just an ingredient. It's not the recipe. So a lot of people say, if I have more money, my problems will be solved. I go, no way. No way. Money is just an ingredient. It is not the recipe to fix your business problems. It's one of many ingredients that you need, right? There's a lot of other things that you need in business as well. You need a marketing plan, a strategic plan. You need to have a revenue plan. You need to have a break-even plan. You need to have systemization. I mean, there's a whole heap of things. And this is why I always warn people straight up, because what I try and do is I very quickly see who has got the goods at a foundational level to sustain in this journey. Because people go, sometimes, Ron, you sound like you're discouraging people. And I go, yeah, I am. I'm discouraging people because if I just say something and they get discouraged, well, it's better that they cut their losses now and they quit the game before they even get in the game. Because what's the point of getting in the game? Because you are going to get knocked out and then you're going to quit and then it's going to hurt a lot more. So this is my way of pushing people out sometimes. And I'll give you an example. I did a presentation one day and somebody said to me, you speak so fast. And this was an entrepreneurship based presentation. I said, well, you need to listen faster because the world's not going to slow down to accommodate you. The world, and this is, look, I'm just being completely direct because I want to serve you. And so the point is that the world's not going to slow down and they're not going to become softer to accommodate your insecurities. And this is something that I learned as well, because I used to be very sensitive myself and things used to hurt me, things used to bother me. And now when a setback happens, I'm very quickly able to put it in perspective and overcome it because I'm not sensitive anymore. And I don't take anything personally. I just go, you know what? That happened, that just reflects a deficiency in my skill set. It reflects a deficiency in the way I think. It reflects a deficiency in my character. I'm not good enough. Remember, I talked about taking 100% responsibility. So the first thing you got to understand is that money is not going to fix your problem. In fact, a lot of people will actually say, if you can't run a business, without money, you will not be able to run a business with money. So I want you to just remember that. If they can't see you being able to run a business without money, they'll say you can't run a business with money either. Okay, so just want you to understand that. Now, because money is an ingredient.
I'm so sorry to interrupt. I think we have a list of questions in the question school. If you can answer like 3 to 4 of them, you have this option to start live answer, right? So you can just click it.
Yeah, I'm just having a look. I've just clicked on the questions tab, so just waiting for something to come up. It's saying there's a question. Okay, here we go. Okay. All right. So let's just see. Okay. So I'm just going to be direct with you guys. So here's a question from Chandni: how to rope in investors without tweaking my original ideas much. Now, the first thing, I think there's a problem in the way you're thinking. How to rope in means that you see them as a source of cash flow for you. Okay, so I'm going to go into that, why that kind of thinking is going to fail you straight away, because you want to rope in investors. Investors are not foolish, guys. You got to understand that even the smallest angel investor has a minimum net worth of $1 million. And because only 4 or 5% of the world population has a net worth of $1 million, these people are already quite smart and they can see through this kind of thinking. So you don't rope in investors. You see investors as partners in your business. And if you say, I'm going to rope in somebody, that language that's going on in your head, I feel that it's already very selfish and it's very self-centered. So again, as I said to you, I'm going to be direct with you. I would suggest that you change the way you're thinking, because roping in investors almost means that you're kind of reeling somebody in, which has got, to me, it's got a very unethical feel. Okay, where can we get the investors from? So that depends on what kind of investors, and I'll go into which investor you target depending on what stage you're at.
Ron, click on the tab Start Live Answer when you're answering to Jane.
Okay.
Yeah, that directly notifies it. There's this option of Start when you're answering to Jane. Or you can just...
No, it's not allowing me. Just hang on. So I've got the questions here.
Okay, no issues. Let's just carry on. No issues.
What I might do is, guys, I might go through this presentation and then you just wait your questions, because some of you are asking tactical questions already, right? Let me give you a broader landscape here first. So one of the things that you got to understand is that no investor is just going to give you the money because you need money, okay? Because you need money, so they're not going to give you money. That's not how they think. So one of the first things I say to people is that you got to think like an investor. So think about the fact that you have $1 million and I come to you and I say, can you give me $100,000? What are all the things you're going to want to know about me and my business before you're going to give me the money? Think about that first, because first thing you've got to do is you've got to think like them, not like you. The moment you think like an entrepreneur, you are going to fail in getting any kind of funding. And I'm going to go through the different sources where you can get the funding from. So if you please allow me to just continue my presentation, and hopefully a lot of your questions will be answered. And if they're not, then I'll come back to them. Okay. So one of the things I said to is money is an ingredient. So what is the recipe? Well, the recipe, you need all of this stuff before you're going to be considered for any kind of funding. Number one, you got to have a proof of concept. Nobody cares about an idea. Okay. Ideas are a dime a dozen. And what they basically want to see is a proof of concept. A proof of concept simply means that there's evidence that your idea has validity, it has viability, it has commercial appeal. Okay, if you cannot demonstrate that your idea has commercial appeal, viability, and that by that you simply have to show that there is enough interest in the marketplace for whatever it is that you're thinking of selling, whichever product, solution, app, service that you're looking to sell, you have to demonstrate that you already have proof of concept. Okay, some proof of concept. Even if you haven't got sales, now a lot of them will actually want to see sales already, but even if you haven't got sales, you need to demonstrate somehow that there is enough demand and interest in what you're doing. Okay, so you might do that through marketing research. You might do that through feedback that you've collected, but you have to have a way of demonstrating that you have proof of concept. Okay, so this is how I was able to get an overseas investor to work with me, is that I first made sure that I have valid and established proof of concept. Otherwise, I would have come across as a real amateur going and saying, I've got this idea. Well, where is it? They want to see it. Okay. The second is I had a revenue plan. So I know that what my costs are and how many units I need to sell to break even and to get into profit territory. Okay, that's the second thing. The third thing is I had an extensive marketing plan. There is a number of ways that you can market, and you have to. When we talk about lead generation, for example, there's a number of ways that you can generate leads. But when it comes to your product and your business and your business model, you have to only pick 3 or 4 types that are appropriate for your business. And you've got to be able to demonstrate to your investors, look, based on my kind of business, I have chosen these lead generation methods, because not all lead generation methods are going to work for all businesses. So literally, for example, everyone thinks that just social media is only one way to generate leads. You've got telemarketing, you've got business development, you've got sales consultants. There's a number of ways. You've got direct mail. So you have to know what is the way that you've got to at least show in a marketing plan, what is the way through which you're going to take your idea into the marketplace. How are you going to make people aware, and how are you going to generate interest for that idea? So even if you haven't done it, you've got to demonstrate that you have the know-how to do it. Okay, because if you don't have the know-how, this is what's going to happen. Let's just say you've come up with a brilliant product. Okay, you're very, very good at creating a product, and you've come up with some prototype, or you've got something and you take it to an investor. If the investor sees an opportunity in the product, but they do not see you as somebody that understands business, they will just give you a $50,000 check, and they will take 100% ownership of your business, and you're gone. You'll make a very little money. They'll make all the money out of your idea because you're not business savvy. Okay, so just because you have a good product doesn't mean that you're going to get funding. You've actually got to show that you're commercially savvy. You know how to think. You're thinking like them. And if you're not speaking their language, they will very quickly pick up on it. There's a reason why these investors are called sharks. Okay, so imagine a lot of I'm not being derogatory, but you're like a little fish when you're starting. Okay, and you've just jumped into the ocean, and you've got this massive shark waiting for you, right? And you're trying to convince this shark, which is like the biggest hunter in the ocean, you're trying to show them that you can do something really amazing. And the shark's got all this experience. It just looks at you and just quickly works you out. So you've got to have a marketing plan. You've got to have a strategic plan. You've got to show them what your strategy is for the business. leadership strategy, management strategy. You got to show them. You got to give it some thought at least. You got to have a break-even plan. If you're not already generating sales, you got to show them, because there's all this cost. You've got to show them how you're going to break even, and break even simply means that the revenue that you're making is equivalent to the expenses at the very minimum. You're not making a loss. And even if you are making a loss right now, you've got to show them how you're going to get to break even territory, which kind of connects back to your marketing plan. And then you got to have a business plan. I'll go through the main elements of a business plan. Okay. So here is the simple formula, really. Now, you have to understand that when you're pitching to investors, and I'll go through, there's various types of investors. You've got to first find out what they want. See, this is where a lot of, like, I'm looking at some of your questions, and it's all about what you want. Okay. What should we do? What question you got to ask yourself is, what do they want? What do they want? That's the fundamental question. And right here, majority of business entrepreneurs will fail because they can't think about anything else other than themselves. So you've got to think about what they want. And what they want is they want an idea that they can contribute to. Okay. They want to make a contribution. So if you look at, I'll actually come back to this slide. I'm just going to quickly explain. So here are the different types of ways that you can raise funding. So you got angels. Angel investors are basically individuals that are high net worth individuals, typically have a net worth of $1 million at least, and they have money that they are prepared to invest in businesses between 10,000 to a few $100,000, and generally they prefer to invest in businesses that are in their local area, because typically a lot of the times their desire to support entrepreneurs is coming from this desire to contribute and give something back. So they want to see their money going in a place where they can actually physically see the contribution being made. So generally they have a bias for investing in businesses that are in their local area. But they're just individuals basically, right? They're connected, they're well connected, but they're individuals. So they're not large businesses or anything. The second is banks. Now the issue with banks is that banks will kind of give you the umbrella when it's sunny outside. But when it's raining outside, they will not give you the umbrella. They don't sell you the umbrella when it's raining outside. So the issue with banks is that most of the time, the banks will give you only secured lending, and they'll give you lending for two purposes, either working capital or capital expenditure. But they will not give you funding unless you can demonstrate both security and serviceability, meaning that you've got to say to them, look, I have this collateral that if something goes wrong, you can take this off me. Okay? Because they want to possess your stuff, but because they want to know. See, here is the thing, right? Let's just say I was a 10-year-old kid, and somebody said to me, Ron, let's just say I want to start a lemonade stand, and I said, look, I need $500, and somebody said, well, you need to give me some collateral, and I go, what do you mean? Well, they go, well, if you don't give me my $500 back and the interest, then I can take something from you. And I said, but I've got nothing. Well, they go, you got a bicycle. We'll take the bicycle off you. Now, if I know that I'm going to lose my bicycle as a 10-year-old kid, I'm going to work very hard, right? Because I don't want to lose my bicycle. And that's the type of mentality. This is the reason why banks prefer collateral, because time and time again, banks have seen that if you don't have anything to lose, you're going to lose it. But when you have something to lose, you will work hard to keep it. In fact, if you look at bank lending, you will find that banks are more than happy to lend you money to buy your home, because most people don't want to lose their home, and they will do whatever it takes to keep their home. But most people, when it comes to buying investments from borrowed money or investing in a business from borrowed money, if that's concerned, a lot of investors will not pay the bank back. Our level of motivation is a lot higher when we have something to lose, and the banks want to see that you have something to lose. Now, some banks do unsecured lending, but the interest rates are very, very high. And even with that, they will want to see at least 2 years worth of profitability. So you can't just go to a bank with an idea. Those days are gone. The banks are in the business of making money. They don't fund ideas. They fund profitability. Okay. Once you grow to a certain point, then banks can also lend you money against invoices, meaning that you have accounts receivables, people owe you money, and they will lend you money against that. But that point, for a lot of startup businesses, that's not even relevant. Then you have venture capitalists. Now, here is what I know about venture capitalists. Okay, so venture capitalists are basically smart, very, very smart companies that have money that they get from other investors, and they invest in startup businesses. Okay, so for some of you, venture capitalists may be a good option. Now, in the venture capitalist industry, there's a saying that if you're asking yourself whether venture capitalist venture capitalist funds are right for you or not, then the chances are that you're not ready for venture capitalism. Okay, because typically by the time you approach a venture capitalist, you have to have a prototype. You've got to have a model. You've got to show them something. They don't just fund an idea. So you'll find that only angels will potentially fund an idea. Venture capitalists will still want to see at least a prototype and stuff like that. So what I'm basically, my bottom line is, if you just have an idea, forget it. Okay, because if you're not prepared to put your own money, time, blood, sweat, and tears first into your idea, then why should somebody else? And that's why everyone's mentality, if I'm an investor, the first thing I want to see is, what have you put into behind your idea? You're asking me to put my money in your idea. What have you done for your idea? Did you give up 100 hours a week for it? Did you go and take risks for it? Did you borrow money from friends and family for it? You didn't do any of that. You're asking me for money. Basically, what you're saying is, you want me to take the risk, but you're not prepared to take the risk yourself. So this is the mentality of all the investors. And that's why I was saying, you got to think like an investor. An investor, the first thing investors are seeing is, how much do you back your own idea? And show me some proof that you've backed your idea. And if you can't show them any proof that you've backed your own idea, right, then they're going, you're asking me to take the risk. But you don't want to take the risk yourself. Because banks always get people, right? There are a lot of times people have a home and they have a mortgage. And they'll go to the bank and they'll say, I want to borrow money for business, but I don't want to put my home on the line. So the bank's response is, okay, thank you. We're not going to give you any money because you want us to put our money on the line, but you won't put your home on the line. That shows how much confidence you have in your own idea. You see that? So this is the problem in how entrepreneurs think. And that's why entrepreneurs typically are unable to secure funding, because they cannot think like the investor. So even a bank is an investor. Effectively, if they're giving you money, they want a return on it. So they're an investor. And you've got to think about that mentality. Always think about, if you were giving money to somebody that you didn't know and they had a great idea, what would you want to know? The other thing you've got to understand is, with venture capitalists, banks, and angels, they have a number of places where they can make money. Okay, they could put money in the real estate market. They could put money in money markets. They can put money in the stock market. Okay, and the stock market returns compounding can be about 12% for them. So if they're going to give you money and you are not an established business and you have no long-term track record and you have not taken a massive risk, if they do give you money still, they're going to want a return anywhere from 300% to 1,000%, because the risk is very high for them. Okay, so you have to understand that. And so a lot of the times what venture capitalists will do is they'll take a minority stake in your business, because they know you can't pay. If you can't pay them, they'll just say, we'll take a minority, they can take up to 50%, but generally venture capitalists will take under 50% share of your business. But they will need to be convinced that your business can be sold as a going concern. That's the technical terminology to explain a business that can be sold. Not all businesses can be sold. Okay, the more the business is reliant on the founder, the less valuation on the business. Okay, so you might want to write that down. The more reliance on the founder, the less the valuation of the business. That means that the venture capitalist risk goes up, because they're thinking this business cannot be sold as a going concern, because if something happens to the founder, no one's going to buy this business. So you have to, again, think like them. And private equity investors will typically only come in for very established businesses, and they typically lend larger amounts of money, but they want more control. So for a lot of the new entrepreneurs and even established entrepreneurs, private equity investors are not going to be relevant for a long, long time. Okay, so there are 5 types of people who will give you money. It's been said. You've got family. Okay, you got friends. You got founders, so you might have a co-founder, somebody partners with you, fools, and professionals, and which is where the professionals are angels, venture capitalists, banks, and private equity investors. So the thing is, what you have to understand is that these guys are not fools. They're not fools. So when you are just thinking about reeling them in, or you're trying to get money out of them, they're not idiots. right? They have made their $1 million because of very smart investment decisions, and they understand human psychology, right? So the first thing that they look at is, who are you? And I'm going to go through the process of what you put in your pitch deck when you're pitching to venture capitalists or angel investors. There are a number of things that you need to have in there to be able to answer all of their questions. Now, one of the things I would say to you is, a lot of entrepreneurs in the beginning take money from family and friends, and there's nothing wrong with that, by the way. What I would, I'll give you a couple of tips though. If you are going to pitch to a family or friend, never say, I want you to invest. Always say, do you know somebody that will want to invest in my idea? Okay, always ask them if they know somebody else. It takes the pressure off them. And a lot of the times you'll find that you might approach your friend and say, look, do you know somebody that might want to invest in my business? And they may go, well, I'll invest, right? Because you're not directly pitching at them. People don't, sometimes if they're not a professional investor, they don't want to be directly, they don't want you to pitch at them directly. So you ask them if they know somebody. And the second thing you can do is you treat them like a professional investor, meaning you still have your business plan, you still have your marketing plan, you still have your revenue plan. You don't take it casual. You don't take it for granted that you're getting money from them. Because I can tell you now, if your approach is casual towards them, you will lose their money and you will burn that relationship. You must treat their money very, very seriously, because so many entrepreneurs in the world have lost family and friends' money because they took it casually. Okay, so you have to treat them just like you would treat as an investor. So these are the two tips I will give you. If you're going to take money from friends and family, ask them who they know that might be interested and treat them like an investor. Even if they don't understand the numbers, even if they don't understand, subconsciously they will see that you're professional. Subconsciously it builds trust and it demonstrates character. And business is a human endeavor. It's not about numbers. Foremost, it's about trust. Okay, you have to understand this. Everybody thinks that if you just show up with a very intelligent idea and you really articulate in how you present and you sound like a businessman, none of that builds trust. Character and competence are the only things that build trust. You demonstrate your character by showing care, and you demonstrate your competence through preparation. You take those two things out, trust goes down, and the ability to get money also goes down, because no one's gonna feel comfortable in giving you money, because 99% of human decisions are emotional, not logical. So you still, even if you're dealing with investors, you got to understand that they're emotional people. Okay, so this is the thing that you got to understand here, is that yes, there is no easy way to get money, because one of the things that entrepreneurs try and do is they're not after funding, they're after easy funding. And that's the issue in itself, because if you want easy now, you're not even prepared to work at the front end. You're not going to work at the back end once you get the money, because all research now shows once the money comes in and sitting in your bank account, we become complacent. The incentive's not there anymore. And that's why, as an investor today, if I was going to invest in somebody's business, and we're dealing with a company right now, and you know they've built an amazing platform, and I have asked them like 100 questions. And this gentleman, he has shown me his business acumen, because he had all the spreadsheets, all the charts. He talked about all of the assumptions that he made. He demonstrated to me that all the assumptions that he made were reasonable assumptions. He was not being unrealistic. He showed me his track record. So now I'm thinking, okay, you know what? I'm prepared to invest some money in his business, right? So personally, I've raised funds myself, and I do that because I think like an investor. I don't think like an entrepreneur. So I know that nobody cares about my idea. All the investors cares about is, where is my ROI? Where's my return on investment? Okay. So what do investors want? They want to contribute, and because they feel valued if they contribute, and they want a return on investment. And if you win as an entrepreneur, then they can say, look, I invested in this entrepreneur, and you know what? They feel proud about themselves. And so you got to think like that. And so this is exactly the kind of mentality that I have. I will take an idea and I will conceptualize the idea first. Okay, I'm not just going to take the idea. I will make sure that I have already, if I haven't got money, I've put blood, sweat, and tears to commercialize that idea. And in the beginning, you know, sometimes you need help, and you may be lacking a particular skill set. So what you do is you look for other people that have the skill set in your networks, and if you find the right person, you give them an equity share in your business. You say, look, I don't have any money to pay you, but I'll give you a 10% stake in my business. Here's the presentation. Here's why I think my business model is going to do well. This is what makes my business unique. Here's my revenue plan. Here's my marketing plan. Would you like to come on as my partner in this business? Here are my expectations from you. But if the business does well, we'll all win. Okay? And you want to always attract entrepreneurs in your business, but you want to attract entrepreneurs that do not think like you. There are 4 different types of entrepreneurs, and it's outside the scope of this presentation for me to explain what they are. But you want to go with an entrepreneur that has a different skill set. But an entrepreneur is somebody that is prepared, willing to take risk in the pursuit of a reward, and they're okay with lack of tolerance. They're okay with uncertainty. So you have to, I can't emphasize this point enough. Just doing this alone is going to make you a successful investor. So what I did was, I have a business called one of my businesses called The Successful Male, which is basically, there was a lot of stuff out there in the women's space to enable women to develop, but there was really nothing that was helping men. And one of the things I realized was that there was a significant gap in the marketplace, that nobody was providing life education for men to develop holistically. And I don't know if you know, in the Western world, the rates of suicide, depression, anxiety, and violence are significantly on the rise. And all the mental health initiatives that have been aimed at men have failed. Okay, and so it was a very different idea. In 2014, I was just in the car with somebody, and I had literally had the idea, and I said to them, "Can you see if the domain name thesuccessfulmale.com is available?" And I remember she said to me, "Oh, why?" I said, "I don't know. Just have a look and see if the domain's available." And she said, "Oh, even if it's available, it'll be very expensive." And then she said to me, "Oh, it is available. My God." I said, "Oh, how much is it?" I said, $14.99. I said, "Buy it." And she's like, "Why?" I said, "I don't know. Just buy it." Because what I knew was that I wanted to do something in this space, because as a man, when I was growing up, I didn't have mentors, and I had seen men in my circle struggle. My cousin had died, and my best friend had died. And so I had seen a lot of suffering, and men really don't talk to each other. So I knew that I just had an idea at that point, but I knew that an idea is not going to suffice. So what I did was I set up I started to then think about the idea. I said, okay, what does this concept look like? What is my unique value proposition? And I researched what all the other initiatives that were happening in the men's space. I realized that there was other initiatives in the men's space, but nobody had come up with an idea that was looking at holistic development for men. And so we literally said, we're going to redefine success for men. And then as we started to do that, then we started to create a branding assets. Then we said, okay, we've got to come up with some sort of an offering. So what I did was, I didn't have any money at the time to invest in this business. So to get my proof of concept, what I did was I worked out what I was going to sell, and I pre-sold it before I created anything. So I got the money in that way. I got the money from the customers. Okay. So I said, look, I'm developing this particular model, and I had only developed a 10% of it, and I sold it first. I got the money in the bank, and then I used it to develop the rest. Now, this type of resourcefulness is what investors look for, right? They say, wow, because what they want to see is you will make these things work. And one of the biggest fears that investors have is of lazy entrepreneurs, right? They just want the money quickly because they're looking for the easy way. So I always think, how can I demonstrate to an investor that I'm not looking for the easy way, that I'm prepared to do whatever it takes? I'm committed to the long term, that I have an idea that I really believe in. The passion of the founder, they really want to see that as well. But passion by itself is not enough. Passion is a heart endeavor. Your planning, your business plan, revenue plan is an intellectual endeavor. You've got to have both. If you're lacking passion, you have all the intellectual stuff, it's not going to work. If you have all the passion in the world, but you're lacking the intellectual stuff, it's still not going to work. You've got to integrate the two. So that's how we, and then what I did was I did a lot of work in that space. I basically showed proof of concept. We had thousands of people on our email list, and we had started to create intellectual property, and we were generating so much interest. And then I started to share it on social media so everybody could see it. I put it out there in the world to say, hey, there's this concept. And people were intrigued. Some people didn't like it. Some people misunderstood it, but it got people talking. And my first thing was I wanted to demonstrate to any potential investors out there in the world watching this that, hey, my concept is memorable. Because that's the number one challenge today, is how do you come up with a concept that's memorable? because people are very distracted, right? Even right now, a number of you might be listening to this presentation, but you might be on your phone, you might be thinking about something else. People's distraction levels are very, very high. And that is an extreme challenge for entrepreneurs, is how do you become memorable? So
Ron,
that's one of my first challenges. Yes.
so sorry to interrupt, but we are just quite short of time. So if there are any quick questions that you want to answer, you can just check in the questions panel now.
Okay, so what should we keep in mind before starting a business? So Jiga, you asked me that question. I've just gone through some of that. So here are some of the things that I would say you need to do. You need to have your mission, which basically means what do you want to accomplish? Vision, how you're going to, your mission is what you want to accomplish. Your vision is why you want to accomplish it. Your strategy is how you're going to accomplish it. And your SWOT analysis. You've got to have all of this before you start a business. Okay? When it comes to pitching to an investor, Vikas has a question: at what stage should we raise funds? Because hopefully that question's be answered. You want to have proof of concept, and you want to demonstrate to them that you've built some sort of prototype or model or 3D version, and you want to show them a revenue plan and a business plan. And you want to show them all of that stuff. Now, this is what would go into your pitch deck. So before you even present to an investor, you want to have these questions answered. And number one, who are you? Meaning, who are you in terms of what's your professional and personal background? What work have you done? What accomplishments have you got? What is your experience? What is your unique perspective? They want to know that. What is it? What have you created? Right? What is actually created? Is it a product? Is it a service? What is it? Right? Where are you? Meaning, what's your current situation right now? You've got to say, well, either I'm just at the concept stage, or we've got these sales, or we've got proof of concept. They want to know where you are, exactly where you are. And you've got to quickly communicate that. Where are you going? What's your vision? Where are you going? What's your plan? Do you want to have market penetration? Do you want to be the biggest provider? Do you want to be do you want to dominate a micro niche? You want to tell them where you want to be. Who wants it? That's the biggest question. They're going to know who wants it, right? And how many want it? You have to demonstrate to them. Then how do you know they want it? They will ask you this question: how do you know your customers want this? Demonstrate, and this is where proof of concept comes in. Okay? How will you tell them about it? Meaning, how do you market that? Even let's just say you have the best product and there's a lot of demand, you still need money, or you need some initiatives to get that message out. What is your plan to get that message out? They're going to want to know it. They're going to ask you who else has it. Who else has it? Right? Is there somebody else that's already doing this? And if you haven't patented your idea, they'll say, well, even if you come up with the best idea, it can be easily copied. So they'll see a risk in that. What do you want and why? They'll want to know how much money you want, or what equity, like what do you want? You have to know how much funding you are asking for and why. What are you going to do with that funding? You can't just say I want $100,000. You have to give them the breakdown of where you're going to use that $100,000. Okay, and what's the exit strategy? If something goes wrong and doesn't work, how are you going to get out of this business and cut your losses? They want to know that. Okay, you've got to answer these questions. Basically, you've got to treat them like partners, not cash cows. If you want money, you have to understand you need them more than they need you. They are being pitched to by hundreds of people. Okay, so you have to understand that because you need them, you've got to be humble, and you have to treat them. You've got to demonstrate to them that you're actually thinking of partnering with them, and you value them and you respect them, and you don't just see them as a cash cow. Now, here are 5 questions that every investor will be thinking about, whether they articulate it or not. You need to know this stuff before you start your business. And I've got a few of my mentees that are on this call right now. Number 1, what is the specific problem that you are solving? Specific. You must know the exact answer to this question. Number 2, who are you solving this problem for? Exactly who are you solving this problem for? You can't create something that has mass appeal, because that requires a mass budget. Okay? You can't market to everybody. It's too expensive. So who are you specifically targeting? Okay? The third question is, why do they need this problem solved? Why do they need the problem solved? If there is no problem, there is no business, because business is just the art of solving a problem. So why do they need this problem solved? You must be able to answer that question. The fourth question, which is in my opinion the most important question: why should they have this problem solved through you? Why through you? And fifth, how will you solve this problem? These are the fundamentally five most important questions that any investor wants to know. And if you don't have the answers to this, you're not going to be able to, you basically don't have a business model. You're just going to come across as a real amateur. Okay,
Sound.
Nathan's asked the question, where can we find the money? So, Nathan, I've talked about family, friends. I've talked about banks. I've talked about venture capitalists. Now, venture capitalists, there's a lot of organizations, depending on the country that you're in. You can actually literally look up the directory of venture capitalists, and there's a number of organizations. There is a lot of government bodies that will actually provide you with a listing of all the venture capitalists. But you don't want to approach one until you're prepared with this stuff. You're just going to waste your time. You're going to waste their time, and you're going to discredit yourself. And then in the future, you will not be able to be eligible for any funding because they already set an impression in their mind.
Awesome, awesome, Ron. We get to know about the specific details that you have given us, and also the basic thing that I liked very much is it's just not about the idea, but it's actually about building that idea. So that was a great learning for us. And guys, I guess this is the time that we end our webinar. It was great to have you on our tour, Ron. Would you like to say some last words on this webinar?
Guys, just, the thing is, I know that some of this might be overwhelming and some of you going, oh my God, this is a lot harder than I thought. But don't underestimate yourself. Like in the beginning, it's always hard. And you'll have this, what we call this negative self-talk that will say, you don't know this stuff. But look, I don't know any of this stuff. And I learned it all, right? And I implemented it all. That's why I said, first find the thing that you really care about. You've got to care about something. And then don't see them as just a cash cow. Like that's the best advice I can give you. Now, if you're wanting to build your business knowledge, like I'm starting to put out more and more business related stuff because I'm starting to realize people have a lot of gaps in their learning. So just connect with me on Instagram and LinkedIn. Find some mentors as well. Like there are some great mentors out there. I'm developing a program myself. One of my favorite business models for those who haven't got a business idea is thought leadership. Why I like thought leadership is because unlike retail, distribution, manufacturing, services-based businesses or network marketing, thought leadership is just an individual who has an idea and they create a brand and they create intellectual properties and they create impact around that idea. So if you're somebody that has an idea that can change the world and you want to know how to go from conceptualization to commercialization, just get in touch with me and I'll show you some of the ways that you can do that. But other than that, just understand that, look, business is a 10-year journey. The employment is a 40-year journey. Okay. So, you can do the same thing for 40 years, or you can have it really tough for 10 years and become rich, but you must allow 10 years. Like, I don't care what anyone says. Anyone that says you can become rich in 2, 3, 4 years, they're lying to you. It takes about 2 to 3 years to stabilize yourself, 5 to 7 years to get really good cash flow, and 10 years to become rich in business. Okay. If you know that, you're not going to take shortcuts. And I just, that's probably my parting words for each one of you. And I just want to keep it real, guys. So hopefully you found that, I'm very, very real with stuff. I don't want to sugarcoat anything and make it sexier than it is. There is a lot of rewards in this business, but you just got to do the hard yards first.
Thank you so much, Ron, for taking out time to be on our webinar. And we are definitely, like, as people are also asking in chats that we want a part 2 session. So we must plan this session very soon. And the rest of the questions, those questions who are unanswered, we'll try to get them answered through Ron very soon on the email. So guys, a little information for you guys that this is India. Like, we are based out of India and we're doing this from New Delhi. As quoted, so feedback is the breakfast of the champions, right? So what we need is a small feedback from all you guys. We'll shoot an email to all of you that have registered for webinar, and we just need small words from you so that we can continue to make our webinar successful.